Hey everyone, welcome back to the Crypto My Money Show. My name is Martin and I am joined by Joel.
Hello, everyone, and welcome back to what I think is one of the most exciting episodes so far.
Yeah, absolutely. In your own research, you're telling me that you've become fascinated by stablecoins, which we'll get to here in a little bit. So I'm excited to have this conversation with you.
Yeah, I'm pretty excited. So last week, my knowledge of stablecoin was very, very small, very, very limited. I know I was asking you very basic questions of like, what is stablecoin? And yeah, over the course of the week, I was able to dig down a little bit more. And I gotta say, I can't believe it took me this long to actually do some research on it and to try and to at least conceptually understand it.
Yeah,
I'm pretty excited about it.
yep. But now that you've done your research, you're sold.
I am more than sold. I am a believer now.
That's freaking awesome. So let's start from the top. We're going to start with the supreme asset in the digital asset uh, classes, Bitcoin, digital gold,
Oh yeah, the OG.
the OG. That's right. So it's interesting that Bitcoin has now developed this digital gold narrative, but it makes sense because Bitcoin and gold share a lot of similar attributes.
Yeah, in many ways too. I think it's better than what initially was looked upon as. I mean, initially when it came out, everyone was the whole assumption was that it was going to act like currency, but it did not end up where at least right now it's not ending up to be that way. Just mostly because of how much the price fluctuates. Like if you go out there buy a coffee. That coffee could cost you $8 or $20 or who knows, right? Because the price fluctuates so much, and so people are starting to look at it more like an investment. And that's where now it comes to, the label that mostly everyone is putting as digital gold.
Right. If you had invested in Bitcoin 5 years ago, 10 years ago, you would be up. So not only would your purchasing power be protected, but it would actually have increased many, many, many times over. And that's basically what Bitcoin, or not Bitcoin, that's what gold is supposed to be compared to fiat, because fiat is only backed by the debt of sovereigns. So in theory, if you hold X percentage of your net worth in gold, it should hold its purchasing power better than fiat because it's backed by a physical metal.
Exactly. With the only exception of this one is being virtual.
Yep. And gold has scarcity because gold is continuously being added to the system. There's mining, active mining operations and whatnot that increase the stock, the amount of gold that's available. In contrast, Bitcoin is finite because it is limited to 21 million Bitcoin ever existing.
Which in many ways it's a lot better to know the finite amount, right? Versus gold. I mean, look, who knows? Maybe there is a huge gold supply somewhere that hasn't been discovered yet. It's like there's always that chance, right? There could actually be a lot more gold produced, which could bring down the value. But with Bitcoin, you always know the exact amount. Like you know for a fact that that's not going to change.
Right. And if we look a little bit further into the future, say 100, 200 years, which is probably a little further than our timelines. But between now and say 200 years, we're going to become a multi-planetary species, or definitely a spacefaring society. And who's to say that we start mining asteroids in 20 years and all of a sudden there's more gold in one asteroid than has ever been mined on Earth? Well, what does that do to the price of gold? Uh, I don't know. Maybe the transportation costs are so high that that doesn't do a whole lot, but that's still a risk, especially for people our age, because I do think we'll start seeing space mining in the not so distant future. So I wouldn't bank on gold for my retirement wealth, knowing that there's a potentially near unlimited supply of gold down in space.
And even if that, even if the binary stereo made out of pure gold, like it would still be pretty hard, like you mentioned, right? It'd be pretty hard to transfer and whatnot. So even
Right.
it's crazy to
So
think that even so far into the future, like Bitcoin could still be like a much better choice in terms of it just making it more transferable and movable.
yeah, so imagine what happens when we settle the moon. How are we going to transfer value between the moon and Earth? And like what answer do gold bugs have for that? Are you going to be moving gold between Earth and the moon? It's so expensive to transport anything into space. Like every single pound of cargo matters when you're filling up a rocket. We're not going to be filling up rockets with gold. Maybe we'll have a craft coming down because we're doing mining, we're bringing the gold back to Earth, but I don't think the reverse is necessarily true because it's so expensive to launch any payload into space.
Maybe more expensive than the gold is worth, right?
Yeah, exactly. So this is another long-term case for Bitcoin is that it enables anyone that has an internet connection anywhere to participate in this asset class. And the way I think of it is it's a long-term store of value, similar to gold, but then also similar to real estate. You buy real estate for the long term, expecting the appreciation to go up. You can also, the benefit with real estate though is that you can still generate cash flow though, where you can rent out that real estate and earn cash flow in addition to the long-term appreciation. Well, you can do the same thing with Bitcoin. You can hold it in your wallet, in your cold storage, not earn any interest because it is 100% yours. You hold custody of it, but you can also put your Bitcoin into an account that then loans out your Bitcoin and you get paid 5 or 6% interest. You can generate that cash flow in addition to the long-term appreciation. So if you're going into this Bitcoin specifically, if you're going into Bitcoin with a short-term mentality, in my opinion, you're doing it wrong. Chris, of course, everything we talk about here is financial opinion, not financial advice. So yeah, do whatever floats your boat. But that's how I'm investing in Bitcoin with that long-term mindset.
And I completely agree. And I mean, it's like with any new asset that pops up, right? At first, it's very volatile, or at least it seems to be very volatile. But over the long term, it starts to stabilize to some extent. And I also believe that that will happen with Bitcoin as well.
Yeah.
I mean, we're at that stage when like maybe people first discovered gold and decided to use it as currency as well, right? Like thousands of years ago. I was like trying to
Yeah.
figure out how everything's going to work, but over time it's stabilized. I
Yep.
believe Bitcoin would be very
Yeah.
similar to that.
Yeah. Bitcoin has a lot more transparency than gold. So these companies that create loans off of Bitcoin are much more easily audited by the public because uh, people find out what the addresses are and they could keep track of them. So you know that if this company says that they have X amount of Bitcoin, you can check their address. And now if they're um, creating derivatives on top of Bitcoin, you can verify that there's actually Bitcoin backing those derivatives. Whereas with gold, there's more paper gold out there than physical gold. And it's a lot more difficult to actually verify that that gold's yours. And it's even more difficult to take custody of that gold. Whereas with Bitcoin, you can move it off of exchanges or transfer from one account to another at any point in time, any day, 24/7, 365.
Hmm. So in many ways, this makes the players more honest, right? Just because of the transparency.
Yep. So yeah, that's Bitcoin, long-term store of value. Let's compare that with Ethereum, which is the second largest coin by market cap, and it's related, let's say cousin Cardano, which has a similar value proposition to Ethereum.
And these ones are also pretty exciting because not only do they serve a function of store of value, but they also allow you to create what's known as smart contracts,
Yep.
which in very simple terms is just lines of codes that execute by themselves and are completely decentralized. No one person controls them. Once they're created, they go up on the blockchain and they just keep it an ear out to hear on whether any action happens in the blockchain that would make them activate and send funds from one account to another. Um, and I would say that that's about the gist of it. But it's very exciting because now you're able to get into some really cool stuff of, it's almost like putting a promise out there on the blockchain that, no matter what, it's always going to be fulfilled.
Yep, exactly. In many ways, smart contracts make the legal system redundant, but they also make a lot of the financial sector redundant because a lot of finance exists to move money from one place to another with a trusted centralized authority in between. Well, what these networks do is they eliminate the need for that central authority because you have all of these nodes providing the security for the system. So in essence, they replace the centralized authority. And in many ways, they eliminate a lot of the legal system because the smart contracts enforce the conditions of the contract, whereas a lot of what civil court is are people breaking contracts. Well, if you can't break the contract, then you won't have to go to court subsequently, right? So it's sort of like eliminating the ability of people to break contracts because it's all codified. It's all put in code. Like you said, when certain conditions are met, the smart contract executes. There's no way around it. The only way you can get around it or have a smart contract not work as it's supposed to is if it gets hacked, which is a very real risk. But they're smaller, not smaller. They're less frequent events in comparison to what happens typically with contracts in any society.
Mm-hmm. I would say the value of the gains would outweigh that risk for sure. And yep. I mean, and they're also evolving, right? Like they're always making them better. So that risk is always decreasing the way I see it.
Exactly. So Ethereum and Cardano with their smart contracts. Well, Cardano is about to release smart contracts, but Ethereum already has smart contracts. Smart contracts are the building blocks for the next two asset classes or sub asset classes in digital assets, which are stablecoins and NFTs. So smart contracts are what you use to create stablecoins. They're also what you use to create non-fungible tokens or NFTs. So it's important to know that Ethereum and Cardano and other chains like these two are the kind of like the network that enabled this other ecosystem on top of it. All right, so with that, all of that in our pocket now, let's move to stablecoins, which I know you're super excited about.
Yeah, this is the one thing that I've been not only waiting for, but I think the climax of this podcast. So yeah, I'm super excited. Stablecoins. So the reason why I'm the most excited is because this is essentially moving whatever it's backed by. So most of the stable coins are backed by fiat currency, like the US dollar. So, in the case of those currencies backed by the US dollar, it's like essentially moving the US dollar to the blockchain, like, digitizing it. Which, I mean, it took a while for that to sink to me. And to think about it, because, if you think about it, the US dollar moves very slowly between big banks nowadays for most big banks. And so by the US dollar essentially moving to the blockchain, like the transaction speed is just, it's crazy to think about it because it's essentially happening within seconds, if not milliseconds.
Yeah. So I'm really excited about stablecoins because they're digital wrappers to fiat currencies. And I think that stablecoins have a lot of similarities to the first internet payment companies like PayPal, where the internet didn't really take off until it was a lot easier to exchange value so that then you could have e-commerce. I think Pizza Hut was the first major company that allowed you to order online. I think this was in the mid-90s, but you ordered a pizza and then you had to go pick it up and you had to pay it cash. So the payment wasn't done through online as we now know it. But in order for that to happen, companies like PayPal had to come along, which handled all the dirty work of dealing with banks and transferring value on the actual existing infrastructure. But they made it faster because while all that could happen in days, they were essentially mimicking near instant settlement on their system. So I think stablecoins are like the PayPal moment, but for blockchain, where now you have this interface that connects to the legacy fiat system to the digital, right? It's an on ramp from the fiat to the digital. You still have, or you're supposed to have that dollar um, stored somewhere in a trust. So that stablecoin is supposed to be backed by dollar. That way you can smoothly go from fiat to stablecoin, but then also stablecoin back to fiat. So it's just like that digital wrapper for the dollar.
And that's essentially that's essentially like back in the day when the US dollar was backed by US gold, right? Where every dollar said, you know, this is worth, or you can redeem this for X amount of
Yeah,
gold. Like that's essentially what's happening, right? With the
yeah,
exception of this being all digital. When you buy a stable coin,
yeah.
it's essentially like a promissory note saying like, hey, you can redeem this for 1-to-1 ratio with whichever fiat currency or whatever is being backed up by it.
Yep. Uh, the internet took off after online payments was figured out. Think Amazon, all the e-commerce, subscription services, SaaS, all of that. And once you had the payment figured out for the internet, people were attracted to the internet because of e-commerce. And I think that was one of the Trojan horses that sort of got people into the internet. All of a sudden, the internet became mainstream because you didn't have to be a geek to love the internet. You could now use the internet as a fashionista, for example, to buy things online that are not available in your hometown beauty store. So all of a sudden, it the internet was no longer relegated to the realm of cypherpunks or geeks or people who are early adopters. Now anybody could find a use case for the internet. So I think stablecoins are going to facilitate that for digital assets because stablecoins now introduce people to higher interest, which is one of the reasons why I got into digital assets last year because I was seeking higher returns. Stablecoins give you that higher return, so now you have a greater incentive to use decentralized networks. The increase in adoption, I think, is in ways being fueled by people trying to escape inflation by receiving higher yields with stablecoins. And as these people are arriving, they can then learn more about Bitcoin, Cardano, and Ethereum, all these other digital assets. And I think it helps the ecosystem grow as we're seeing right now.
Definitely. And it's pretty it's pretty crazy how much you can earn just by essentially having your money set in stablecoin. I mean, you know, I know that the money that I have in my stablecoin is paying me 9% interest, which is insane.
Yeah,
I think my bank is paying me like 0.05 per year.
yeah,
I see a couple pennies trickle here and there now and then
yeah,
into my savings. So it's like it I mean, it's a huge of a difference, right? 9% versus like 0.05. And the fact that it's pegged 1-to-1 makes me feel pretty good, pretty comfortable. And a lot of this stable coins also have systems set in place so that, you know, it's easy to audit. It's easy for people to gain confidence and trust.
yeah,
Uh, but completely agree. I think this has huge opportunities, and the adoption rate is also increasing. I think since like 2020, the adoption of like stable coins has quadrupled. It's going, I mean, more and more people are using it. And I think there's a lot of other decentralized applications that are starting to also use it. I know there's also a couple companies that are jumping on board and starting to accept stable coins
yeah,
because it's essentially like the US dollar, right? It's like why not, but a lot faster since it's on the
exactly.
blockchain.
Yep. So let's touch base on Dogecoin and NFTs. I don't think it's fair to necessarily group those two, but the reason why I have them mentally grouped is because I think they have a similar paradigm behind them, where they become like a pop culture sensation. And I think that people just love trends. People love to find the new thing and be part of the new thing. I think this is what drives fashion trends. And I think it drives trends in automotive for people who are passionate about cars and having the latest and greatest car. I think also with collectibles and toys or like the Beanie Babies of the 1990s, where uh, people would buy them with the expectation to resell them. So I think that's what we're seeing right now, but in digital assets.
And there's a lot of money out there as well. And I definitely
Yeah,
feel like, especially like Dogecoin and NFTs are just the playing grounds of a lot of these people that just have a lot of money and maybe don't know what to do and are willing to just, essentially play the lottery on saying, hey, maybe I should buy and hope that they go up, or especially NFTs, right? Hoping that they go up in value by a lot in the next few years. So I
yep.
think the fact that there's a lot of money is also creating a lot of very big risk takers, and this too, for some reason, are really attracting them.
Yeah, I think NFTs right now are fun and they're all about the craze and the art, but NFTs, in my opinion, are the foundation for digital products or digital collectibles, like unique items, but also digital representations of real world assets. So in the future, I can foresee companies tokenizing and creating NFTs for real estate, which could do all sorts of interesting things where like you could have autonomous organizations own real estate and you could have like fractional ownership of real estate and like physically hold the token that is the digital representation of that. So right now it's all great and fun with art and gaming and stuff, but I think it's a precursor to what we're going to see. And in many ways, NFTs remind me of the rhinestones that we talked about in our previous episode, because the value was subjective. With the rhinestones, it depended on all sorts of factors, including the quality, how many people had died transporting the stones, the sailor that brought the stone into town, all of these different factors. And NFTs in many ways are subjective, where people are paying wildly varying amounts of money for NFTs. But I think it's human nature to want to collect things, and as the world is becoming more digital, we're going to have more VR and AR experiences, and I think that NFTs will be a big part of that.
It's almost crazy to think about it, because I guess in theory, the NFTs may allow someone to live in a virtual world and own the stuff in their virtual world.
Yeah.
Buy a very unique painting in the virtual world and be the only ones to be able to hang it in their virtual house.
Yeah, and we've already seen virtual art galleries pop up and virtual events.
Definitely excited to see where this goes. I think it's still very much in its infancy, like we've seen. I mean, some of the amount of money that gets paid for some of this NFTs is just crazy, but we'll see. I'm excited to see where this goes.
Yeah, I'm going to keep an eye on NFTs, and I know that in the future we're going to have conversations on NFTs and the metaverse, because I believe that a lot of opportunities going to open up in this area, whether it be for capital gains or for arbitrage or for collectibles and all sorts of markets for that. But then, like I said, also as physical assets are tokenized, I think there will be a lot of opportunities to make money in the future. Now we're talking 10, 15 years out in the future, so it's nothing short term, but the sooner that you understand it, the earlier you can get in, and early in any market is when the real money is made.
Exactly. And these are also just tokens built on top of other networks, right?
Yep. Yeah, like Ethereum and Cardano. So as we wrap up this video, let's go over each of those four sub-digital assets, and let's give our financial opinion, not financial advice, financial opinion on how to view these if you're looking to invest in digital assets. So we'll start with Bitcoin. We already kind of went over the basics of it. I think of it like gold or real estate. Have at least a 5 or 10 year time horizon. So buy and forget about the volatility. Don't look at the price every day. Don't look at your portfolio every day. Just keep buying, buying, buying. Dollar cost average until you reach your target. So whether you want to have 1 Bitcoin or 5 Bitcoin, set your target, dollar cost average until you reach that, and don't plan to sell for at least 5 or 10 years.
Mm-hmm. Or at least plan not to sell at a lower price than what you bought.
Yeah, yeah. If the
At the
market
very
drops like it,
minimum.
if the market drops like it did in May, just keep holding. Yeah, you'll get your value back. But think of Bitcoin like a way to build long-term wealth. If you're looking to retire in 20 or 30 years, I think Bitcoin is a good option for that, especially if you're young. Now, if you're close to retirement, maybe not because of volatility, but for those of us in our 20s, and I think even people in the early 30s, Bitcoin is a solid option to sort of create this nest egg so that you can, at a bare minimum, retire at a decent age.
Right? Give you a shout out to Drinking Man.
Absolutely. The big networks like Ethereum and Cardano, uh, there's a lot more out there. I see them more like a venture capital or a stock play, where if you're an angel investor, you invest in a bunch of companies and you expect that 90% of them will fail. I think it's similar where we'll have a few networks. Right now, Ethereum and Cardano are sort of rising to the top, but I think we'll have a few different networks, and then we'll have chains like Polkadot that will connect the different networks so that you can transfer value from one blockchain to another blockchain. So an ecosystem will be created, but of the thousands of networks that exist, the majority will probably fail or will stagnate. So you invest in these by finding the ones that you think have the most potential, and you invest in a bunch, and then you wait many years, and then you will probably have one or two really good winners, and then the rest will probably just have mediocre gains. So think of it like venture capital stocks. You pick the ones that are winners, and again, you could day trade these if you want. I think day trading is very difficult, and most people don't make any money with day trading. Short-term trades are fine. I've done some short-term trading with Ethereum. So, but they're more volatile, a lot more risky. The safest thing you can do in digital assets is to buy Bitcoin. But if you have an appetite for higher gains, use these, but have an exit plan, like know your target price and either exit all at once or use a ladder out strategy and take those gains and put them into stablecoin or Bitcoin if you want to further create that long-term nest egg.
Looking at this more like a value investment, right? Of
Yeah, you could use a
do you do your homework, invest in the ones that you believe in the most, and just holding really.
Yeah, that is a great point that you made. I think a value investing strategy would work great for altcoins. And
Yeah.
then with stable coins, there's really not a lot to think about more than just want to make sure that whatever stable coin you use, it has a good reputation. If you use any that are in the top, I don't know, 20 or 30 or 50 digital assets, you'll be fine. So that includes Tether, USDC, Gemini, and there's a few others. I'm a big fan of USD coin, USDC, but you just want to make sure they're reputable because they're when you convert your fiat into stablecoin, they're supposed to have that fiat in a trust somewhere so that then you can go from stablecoin back into fiat.
Mm-hmm.
And I look at stablecoins as like the modern day savings or money market account. You put your money in stablecoins, you leave it in your exchange, or you put it into an app that pays you anywhere between 7 and 12% interest. And that money's there. If you have an emergency, then you can go from stablecoin back into fiat money in your bank account that you can use.
Mm-hmm. And I mean, this almost like the way I say this, almost like investing on a bond or a treasury bill, right? Where you're mostly investing on those types of assets that generally pay very low interest because they're very stable. They don't fluctuate as much as with the stock market and whatnot. And I would say this is very similar to that. And the strategy that I see being applied to that is almost like the same strategy that is used when a person buys bonds. Because you're buying it just so you're buying them so that way you're not taking the risk. But with the exception of stable coins, like you're getting paid quite a bit of interest, like your yield is pretty high.
Yeah.
And the reason for that is because, hey, there's a big need out there in the market. And by you leaving your money there, your stable coins there, you're allowing other companies to utilize that to make that money, that return on that money.
Yeah, stablecoins are used to move a lot of money around that is then used to buy Bitcoin or altcoins. And because the gains are so high in that, people are willing to pay higher interest to borrow stable coins than do other things. And that's why the pay on the interest is higher. And of course, it's a higher risk, but you're getting well compensated, whereas you're not being compensated by your bank. And there is a degree of risk with having money in your bank, but you're just not being compensated. Whereas here you are being compensated for that risk.
Yeah, and the other reason too why banks don't pay a lot of interest is because they already have a boatload of money. Like they wouldn't miss the money that you have in their savings accounts because, well, one, they already have a lot of other money of other deposits, and two, it's super cheap for them to borrow money as well because the market is just flooded with cash. But I think one of the most exciting use cases as well for stable coins is that it just makes it so easy for friends or family to send money to even other other corners of the world. Yeah. And it all happens within seconds versus right now, if you want to send money to another country, like one, the fees are super high. Yeah, exactly. Are super high. And they, usually there's a big lag from when you send it to when they receive it. And stable coins solve that problem.
Yeah, they do. It takes days to get money to my wife in Mexico. And one time we did an experiment on a Sunday afternoon. It took less than an hour to go from money in my bank account to money in her bank account. And it was thanks to stable coins.
Mm-hmm. And this was really kind of like the purpose of Bitcoin at the start, right? Where it was meant to kind of solve that need. But the volatility is really what got in the way. And now that's also the reason why stable coins got created, right? To kind of deal with the volatility.
Yeah.
So it's interesting that Bitcoin became kind of like an asset, and now there's stable coins to fill in that pain point.
I think we could have a conversation just on that piece because it is so big and loaded. But yes, the reality is that stable coins are a much better match to what most people use money for.
Right. And yeah, I got a little bit sidetracked there. I got a little bit excited, but I think that'll be a pretty great episode in the future. So anyone out there watching, keep your eye out for a future episode on just that specific topic. Because I think that is also really, really interesting topic.
Yep, absolutely. And last but not least, Dogecoin, NFTs, in my opinion, strictly for fun. Whatever money you put into them, expect to lose it all for real. A lot of volatility, a lot of hype. The trends are driven by pop culture. The price of Dogecoin is driven by pop culture trends, but they can be a great experience, especially NFTs. They can be a great experience because if you learn how NFTs work, then you're setting yourself up for this decentralized economy that is being built with all sorts of new products that will arise around NFTs. So if you do lose money in NFTs in the short term, it'll be a loss. I think in the long term, you're setting yourself up to be an expert in NFTs, and then whatever derivatives of NFTs are created in the future.
Yeah, if anything, it's a good area to at least start playing around with, right? To at least try to understand how it all works right now.
Yep. One of the difficulties is that most of the NFT ecosystem is built on Ethereum, and Ethereum fees are really high right now. That's prevented a lot of people from messing with NFTs. Me personally, but I'm really excited about Cardano, that coming through because they're gonna have smart contracts, and the transaction fees are really low in Cardano. So I'm gonna get more into this once we clear that hurdle, and it's easier to, or not easier, but it's cheaper to interact with smart contracts. We'll do wraps on this episode, but there's a lot more great things that are coming off of this, and of course we'll continue to do tie-ins back to what is money and the topics that we touched on that, because I think it's important to create this create an understanding in your mind of what is money, so that when you see a new asset class, you can sort of put it in a bucket. You can understand what its purpose is, and you can determine if it's a good asset for you.
And I think there's going to be, the way things are moving too, it's always good to always have that at least in the back of your head to help you at least assess, right, all these new assets coming up, and whether it's something that you believe still serves the function of money, what is money, and if there's opportunity there.
Yeah, absolutely. Leave us a comment if you have questions or there are things that you want us to do deep dives in. Uh, we'll do our best to address your needs. And like this video if you enjoyed this conversation. And with that, enjoy the rest of your day, everyone. Take it easy. Until next time.
Until next time, everyone.